studying your last two. I swim with tea when they turned in. The staring down to mute and can lend a pole that some kid died.
At first glance, charitable donations and political contributions may seem very similar. In both cases, a corporation gives money to an organization. However, from a tax perspective, they are treated very differently, and understanding this distinction is extremely important. Let's begin with charitable donations. When a corporation makes a donation to a registered charity, the charity issues an official donation receipt. That donation may qualify for a charitable donation deduction and is claimed separately on Schedule 2 of the T2 return, subject to the applicable tax rules. Now compare that with a political contribution. Instead of giving money to a registered charity, the corporation contributes to a political party, an election campaign, or a political candidate. Although this payment may be recorded in the accounting records, it does not qualify as a charitable donation. For corporate income tax purposes, political contributions are generally not deductible. In other words, a corporation cannot reduce its taxable income simply because it contributed money to a political party or campaign. This is one of the most common areas of confusion for beginners. Both transactions involve giving money, but only one follows the charitable donation rules. A donation made to a registered charity may be eligible for a tax deduction through Schedule 2. A payment made to a political party or candidate is generally not eligible for that deduction. A simple way to remember the difference is to focus on who received the money. If the payment was made to a registered charity and supported by an official donation receipt, it may qualify under the charitable donation rules. If the payment was made to a political organization or campaign, it is generally treated differently and does not qualify as a charitable donation for corporate income tax purposes. So whenever you're reviewing a corporation's records, never assume that every donation or contribution belongs on Schedule 2. Always identify the recipient first. The golden rule is simple. A political contribution is not a charitable donation. For corporations, political contributions are generally not deductible on the T2 return, while eligible charitable donations are claimed separately under the charitable donation rules. Keeping this distinction clear will help you avoid one of the most common mistakes in corporate tax preparation. Now let's look at how political contributions are treated in the accounting records compared with the tax return. Suppose a corporation makes a contribution to a political party or an election campaign. From an accounting perspective, the transaction is recorded just like many other expenses. The amount is entered into the general ledger, and it appears on the corporation's income statement as a political contribution expense. So far, everything follows normal accounting procedures. However, the tax treatment is very different. When preparing the T2 corporate income tax return, the corporation cannot simply deduct this political contribution to reduce its taxable income. Unlike eligible charitable donations, political contributions generally do not qualify for a corporate income tax deduction. This means that although the expense appears in the accounting records, it is generally not recognized for tax purposes. As a result, the amount usually needs to be added back when calculating taxable income. In other words, the accounting expense is reversed so that it does not reduce the corporation's taxable income. This creates another example of a difference between accounting rules and tax rules. Accounting records the expense because the corporation actually made the payment. The Income Tax Act, however, generally does not allow that payment to reduce the corporation's taxable income. One of the most common mistakes made by beginners is confusing political contributions with charitable donations. Because both involve giving money, it's easy to assume they receive the same tax treatment. They do not. A donation made to a registered charity may qualify for a charitable donation deduction under the charitable donation rules. A payment made to a political party or political campaign generally does not qualify for that deduction and should not be reported as a charitable donation. A simple way to remember this rule is to ask one question: who received the money? If the payment went to a registered charity, review the charitable donation rules and Schedule 2. If the payment went to a political party or candidate, remember that it is generally not deductible for corporate income tax purposes and should not be claimed as a charitable donation. Keeping this distinction clear will help you prepare accurate T2 returns and avoid one of the most common classification errors involving donations and political contributions. Before filing a T2 return, it's important to review any payments that might be political contributions. Many of these payments can look similar to charitable donations, so a careful review helps ensure they are treated correctly for tax purposes. Start by reviewing the corporation's general ledger and expense accounts. If you find a payment that appears to be a donation or contribution, your first question should always be, who received the money? If the payment was made to a registered charity, you should verify that an official donation receipt has been issued. Eligible charitable donations are generally claimed through Schedule 2, subject to the applicable tax rules. However, if the payment was made to a political party, an election campaign, or a political candidate, the tax treatment is different. Political contributions are generally not deductible for corporate income tax purposes. They should not be claimed as charitable donations, even if they appear in the accounting records as an expense. As a tax preparer, it's helpful to follow a simple decision-making process. First, identify the nature of the payment. If it is a charitable donation supported by an official receipt from a registered charity, review the rules for claiming it on Schedule 2. If it is a political contribution, remember that it generally does not qualify for a corporate tax deduction. Instead, review whether the accounting expense should be added back when calculating taxable income. There are several clues that can help you identify political contributions. Look for payments made to political parties, election campaigns, candidates, fundraising dinners, campaign advertisements, political fundraising events, party memberships, or contribution checks issued to political organizations. These items should immediately prompt you to consider the political contribution rules rather than the charitable donation rules. A good review also includes asking a few key questions. Who received the money? Was the recipient a registered charity or a political organization? Is there an official charitable donation receipt? Was the payment related to an election campaign or political fundraising activity? And has the expense been recorded in the correct account? The most important rule to remember is simple. If the payment was made to a political party or candidate, it is generally not treated as a charitable donation for corporate income tax purposes. Do not claim it on Schedule 2. Instead, review the accounting treatment carefully and determine whether a Schedule 1 adjustment is required. Following this review process will help you correctly distinguish between charitable donations and political contributions, preventing one of the most common errors made by new corporate tax preparers.